Yeah, guys. So I welcome you to another session of the free session of the free class hosted by CF Trading Now. And in this session, we'll be talking. This will be a continuation of what of liquidity I was talking about earlier. So now, yeah, we're talking about market structure coupled with what coupled with liquidity. So liquidity and market structure together. So now, let's dive into it. Let's go. So now, liquidity and market structure. So liquidity and market structure works together, not separately at all. It doesn't work separately. It works together. So very often the market will take out liquidity first, then show a strip, the shifts in structure that reveals what? They reveal the direction. So liquidity shows where price is drawn to. That's what liquidity is telling you. But structure shows what price is actually what price will do next. That's what structure will tell you. So drawn liquidity shows you where price is drawn to, but structure is telling you what is going to happen next. What price is likely to do next is what structure tells you. So now, how does it play out? What are we trying to talk about? Now, let's say price draws above and hold high or and hold low to take out liquidity. Let me just use this analogy. So you already understand the concept of liquidity before. So I won't take a log on this. Yeah, liquidity. Now let's say price runs above this hold high. No? Before going that way, let me just the price doesn't just move in text. For example, it moves just like this down drawing. So let's just say price did what? Took out this eye. And after taking out that eye, that is what? That's the sweep above what? Above an old eye, right? Now, after that sweep is done, what happens next? Price breaks structure, breaks this particular low over here. What happened? This is what? A change of character. You understand the concept we've been doing before? The concept of what? Your structure, your basic structure that you understand before that I've been talking about. What? Your BOS and everything we're talking about. These are not trend. And this is a single leg, right? So what do you want to see happen? You want to see a pool of liquidity happen whenever you're expecting, okay, the price actually change the character or do something like that to actually combine it with your structure. You already know what is happening over there. You already know what is happening. These are not trend. So after seeing a not trend, expect prices when price changes character, what will happen? A change of character will happen to a downtrend. But for that change of character to happen, what like you don't know when a change of character is going to happen, right? But one of the things you see to expect a change of character is when you see a liquidity, when you see an old eye like this being taken out. So when you see it being taken out, you can expect what price want to change character from that particular uptrend it is in before. So that is how you can combine it with what the structural knowledge you have before. It is over this, it is more than this, you just have to chart is more a textbook example, just like you see over here. You have to understand the chart. So when the more you analyze, the more you understand the chart. The more you analyze, the more you understand the chart. So let's say price took out this eye, and after taking out this eye, what happened? The change of character happened over here. So after the change of character happened over here, this what we call it a structure shift. So the name is all the same. If I call it a block of structure, it's the same. If I call it a change of character, it's the same. If I call it a structure shift, it's the same. Because what is happening? A structure is being broken over here. This particular low is being broken, and the break of this particular low is telling me prices that it's shifting from an uptrend to a downtrend. So anything I call it doesn't matter. You just have to know is what structure is shifting from an uptrend to a downtrend. So that is all that matters. In trading, in technical analysis, a lot of concepts can actually add almost the same meaning. These are just terms, and they don't really matter. What matters is actually what is happening on chart. What you are seeing on chart is what actually matters. Those terms don't really mean much. Well, there are a lot of terms in technical analysis. Yeah. So now after this shift is taken out, what happens? That structure shift is a confirmation that smart money has entered. It is a confirmation that smart money has entered after taking out this particular liquidity. So by coming up, what is happening by coming up? By coming up, I'm feeling this particular wood eye. They have filled their position to willing sellers over here. To willing sellers over here. They fill their position to willing sellers over here. And after filling their position for willing sellers, buyers have filled their position for sellers. Big players have stepped in over here to actually sell the market off. How will you know? How will you confirm there is institutional sponsorship or price is actually smart money is actually in position over here is actually we see a structure shift over here. So that structure shift will tell you smart money is actually in with you after clearing this wood eye, after clearing that buy side liquidity. So and after the confirmation, what do you expect? You expect what? Yeah, the normal regulation, the normal thing you expect the continuation of structure, a lower low, then a higher is formed, then continuation lower and all like that. So just like you already know. So that is how you can you can combine it together. You want to see a structure shift after a liquidity sweep, a structure shift, after the structure shift, it tells you, yeah, price is good, going in the next direction, which is what? Downside direction. So you want to find the other block at your premium over here and and sell off from there, and everything else everything else So you can actually use the Fibonacci retracement too, these are the POIs we've been talking about. Use the Fibonacci retracement and you see it. Yeah, you see it. These are an impulse, and you expect the segment to actually come into your OT level. And after pricing to your OT level, you can sell off again. And this is another bit of structure, and continue the trend just like that. So, and that is how it is. That is how you combine your liquidity sweep with your structure. So let me just go ahead and there's this example I actually traded myself on a daily time frame. So there are a lot of examples everywhere in chat. Don't get it wrong. But I just want to I want to identify this differently. So what do you see here? Ah, trips. Okay. This is so USDT. If you've been in the community for some time, you see I dropped this particular setup before it's played out. But this is not this was not what is happening. But let me just take you through what was happening initially that time. There was this particular formation happening. This particular upside formation happening. Okay, let me just go on to another chart so you get it better. So this particular formation was happening. Yeah, this particular formation was happening. So after that was happening, you see price was in an uptrend, and these are pool of liquidities joined by joined by a trend line. So I could actually see another block over here, a very valid other block over here. Why was it very valid for me? Why was it very valid for me? Because this is an engagement over here. And remember, either external range liquidity or internal range, they are all liquidities. So inducement is actually a form of internal range liquidity, but it's still liquidity. So what do you see happening over here? Let me just do this. Yeah. So after liquidity was taken off as an inducement, tagged into this particular order block over here. After tagging to that particular order block over there, what do you see happen next? A structural shift. So a shift from that particular uptrend into into a downtrend. That was what happened. Let me clean this off. A structural shift happened over here. Shifting from the uptrend you see the market in over before. After clearing that liquidity and tagging into this particular order block over here, showing a liquidity sweep and and an order block, a supply block actually tagged into. What happened? Instantly we got a structure shift. Instantly a structure shift, and after the structure shift, you see a retracement tagged into going for that particular for the next order block formed over here. And like I said about other blocks, whenever a break of structure happens, and whenever a structure breaks, either a change of character or a continuation break of structure, what happens? An other block must have been left behind. So afterwards, after a break of structure happened over here, what happened next? You see the other block that has been left behind over here. And after the other block has been left behind, you see a pullback into the other block. After the pullback, what do you see happening next? Price started going for lower prices. So the next setup you see over here, the next POI you see over here, by now you understand the concept of breaker blocks. This was the market tapped into a breaker block next. Let me clean this line too, so you can see it better. Yeah, that is a breaker block. If you have not watched the video on breaker block, it is on the playlist already on YouTube, and I'll be uploading this too, so you can actually go and check it there. Is so what do you see happening over here? Everything you've been learning is actually being combined into one thing over here. A liquidity sweep over here as an inducement. This I is an inducement over here, even though it is is a liquidity sweep. After the liquidity sweep, price started into a supply block, and change character, because there is a change of character expected to happen. The fact that probably you don't understand the concept of liquidity before, or the concept of supply block before, is how you can expect enough strength to actually continue over it. But when you actually understand those concepts, you actually will see, even though you are not trained before, you know where to expect what a reversal to actually start. So after a liquidity tube over here, it tagged into the demand block, into the supply block over here as another block. A change of character instantly formed. And after change of character, a lower low has formed. And what price made the treatment into what? Into the other block, left behind afterwards, after the change of character, left behind before what? Before the change of character, tagged into that supply block, which is another block again, and what? And broke structure again to continue lower. To continue lower. After breaking structure to continue lower, what happened after price starting to a breaker block instantly? And what happened? You see a lot of volatile values and what? Price started going down lower again. And after what happened again? You see price tagging into what? A what over here? You see price tagging into a fair value gap over here. And after tagging into the fair value gap, what do you see happen again? Price was started going lower again. So this is a fair value gap being respected by the by what? By the setup. By the market. This is a breaker block. This is another block. This is a liquidity sweep. This is an engagement, and this is a supply block too. And these are chain break of structures and continuations too. So just like I'm saying it over here, you can only see it everywhere in your charts. You just have to You have to familiarize yourself with it so you'll be able to see it whenever it is happening. So that is what you want. That is what you want to happen. So just get yourself familiar with the charts. Everything I've been explaining, everything I've been teaching over here is happening live on your chart. So you can always go and say it. You can see I'm using most of this concept to actually share my setups with you in the community. And you can see everything is working out, playing out beautifully and perfect. So there's nothing about it. There's nothing special about it. It's just it is just common smart money concept, and that is what I'm deciphering over here. So that will be that for this session, and see you in the next session.